Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The release of the US CPI data ignited very much a volatile session on Thursday, with the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded off the key level of 105.30 and claims the 106 and settles at 106.32. From there, from the economic data released, the core CPI came in as on forecast of 0.3% as previous, with the CPI month on month coming in lower from 0.6% previous to 0.4%. However, the year-on-year remained unchanged at 3.7%. From there, the market found very whipsaw price action, and with the Australian dollar rejecting that key area, which was seen around 64.45, plummeted to a low of 63.06, and now potentially expects another down challenge due to the heavy technicals and looking towards 62.80.85, and therefore back to the bottom side of the range after its trek towards that top side was wiped out in one session near enough. In light of the pattern though, I'm not going to get too bearish unless we see a close under 62.80, and that would give exposure down towards 62.30.35. Rejecting that topside level for euro, which was seen around 106.50 area, the market plummeted and posted an engulfing candle, and now looks back towards the support level seen at 105.25 or maybe down towards 104.65.70. With the dollar rejecting the 105.30.35 area, we have to see now how that plays out. Nevertheless, the euro, after its recent bull trek, is now in a bit of a spot of trouble, and therefore could see some stop losses coming back into the market as the pressure weighs back on the support again. The dollar yen, well, the market still seems to want to take on the challenge back at 150 after recently displaying a very whipsaw price action. Still, let's see how the market plays into today, and if not, there could be rumours of Bank of Japan returning to intervene and trying to strengthen yen. Nevertheless, let's see how the level plays out at 150. It is a key point, and maybe again we will see a rejection and look back towards the bottom side of the range around 147.5. Sterling, well, the market got close to that top side target with the downtrend coming in 123.40.65 and plummeted all the way down to the lows of 121.70 this morning. In light of the pattern, we are somewhat buckled when it comes to the RSI, and therefore could see a bit more to the downside. But I'm not going to get too bearish because I feel the market might find a bit of support around 120.70 to 121, and if so, then we could see a revisit back to the top side of this trend line. A very whipsaw price action for gold and rejects the key level of 1,886.88, as we can see here, and posts a shooting star, and therefore could see a little bit more weakness. That is, if we see a break of the level of 65.66. Beneath there would expose the region back towards 1,834 and fill this gap that was posted on Monday. Oil, the market found a little bit of support after taking the challenge towards the level around 81.45, and now finds a little bit more comfort in the fact is that the technicals are showing a little bit more firmness, and therefore could see a rise back towards the area of $82.80 to 83.5 and reassess. Well, that's a wrap. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoyed a great start to the new weekend.